Hello and welcome to another update video about FETCH.AI. So on the FET chart, we can see a structure that is just throughout corrective. It is not a great or very clear chart. As you know, we are dealing here with corrective movements to the upside. And it's important to understand the issues that I have with this structure. To understand that, it's best to start on the larger time frame, or actually to explain that. And that's the long-term chart here for FET, where we can see that this is just interpreted as a large ABC structure, and the C wave could get one more high. We are in the late stages of a rally and in the late stages of an uptrend. Okay, so my idea is at the moment that this is an ABC structure, and the C wave consists of wave 1 done, wave 2 done, wave 3 done, but it was weak. Again, there's always a warning. When this move doesn't get to the 138% extension, that is a warning. And we had a pullback into support to the 50% retracement, a rebound, but not really any impulsive follow through, right? So let's go to the daily chart. What do I mean with that? Well, all these structures from the August low have been corrective, overlapping, right? And my idea was first that we are dealing here with an A, B, and the C wave could form a 5-wave move. Well, that hasn't happened. It didn't form a 5-wave move. So we are going to take a look at that on the smaller time frame. It is possible, for example, that this C wave is still unfold, or it actually never started, and the B wave is currently unfolding. So it is a super messy structure. We see, however, more detail on the smaller time frame. Important is to understand that, and I'll remove that support area. What I want to show you is on this time frame here, key support remains at 52 cents. That's the golden ratio level, the 61.8 retracement of the last rally. Unfortunately, from that swing low, we haven't seen any aggressive upside follow through. Well, we're not necessarily looking for that because it is the 5th wave and it's an ABC structure. So in an ABC structure, we don't normally need impulses, but it would still be ideal to see some impulsive structures to get an idea of where the trend is really going. With it, if these are absent and there are no 5-wave patterns, probabilities are typically balanced, and in these scenarios, it's always important to understand, okay, what is key support? Now, key support remains at 52 cents because for a wave 4, the price shouldn't really break below the 61.8 retracement. Well, if it does, then this structure that I've been following for a long time would need to be reinterpreted. The question would be, what is it? It certainly would raise some questions. And I have to say, the only other thing I can, what I would probably watch for is something like possibly here 1, 2, and then this would be just the A wave. And then we might be getting a B wave, but that can be very deep. Certainly doesn't make any sense to hold that or hope for it to be that wave count and then a C wave up. Because what if it turns into a 5-wave decline? Then it's over because it's only a 3-wave move up on the long-term chart. So, we can talk about it from a bullish and a bearish point of view. The bottom line is, as long as we're holding above 52 cents, I'm still leaning higher. Below 52 cents, it's going to be a big warning and possibly a breakdown of the structure. But while I am looking at higher prices, it is all corrective, and therefore expect wave counts to change on the smaller time frame. It's not an easy chart to trade. All right, so let's take a look at the smaller time frame. Not here. And the problem from this August low, or the structural problem is from the swing low, or from the structure that developed since the August swing low, is that the initial move up is only 3 waves. So okay, I'll call it an A wave, that's fine. The pullback, a B wave. Okay, but the C wave, has it started? It's speculative, yeah? So as I explained, the rally from that low is only in 3 waves as well. So it might be wave 1 of a diagonal, but you cannot trust this stuff. Not if the wave 1 is an ABC structure. So that means we have to be ready in case it breaks below the red line. That was my key level or invalidation point, because below that red line, we said it could be either a larger B wave, so that B wave could still be unfolding, or even a wave 4. But in both cases, I would pay attention to 75 cents and 52. And yeah, we have started that decline up there on the 6th of December. It's a pullback so far in 3 waves. It might get one more low, but if it gets one more low, then it's not a wave 2, right? It could still be an ABC structure to the downside, but it's not a wave 2 anymore. It would likely be a reset of wave B then. So that's all I can say at the moment, which means the focus needs to be on the smaller time frame, on the swing low that formed on Friday at around $1.12. Any break below $1.12 will likely lead to invalidation of the 1-2 setup, but then it might just make a marginally lower low and form a B wave there. So basically reset the B wave. Now that all that means is the trend is still down. There's currently no evidence that a low is in. What we need to see is some kind of a 5-wave move up in the 3-wave pullback. And even if it goes below the red line, that's needed. We need a 5-wave move up in the 3-wave pullback. It's difficult. Sometimes we don't get it when we're dealing with corrective structures like these. So when we're dealing with structures like these, it's best to either avoid it completely or just take a, let's say, a scale in, scale out approach. Or you use other indicators in addition to the Elliott wave structure. I mean, the Elliott wave structure tells us we have to be here flexible on the side of caution. Also here you can see it broke the 78.6 fib level. That's an indication of weakness, right? So I can remove that support area now. We don't need it anymore. There is a possible 5-wave move up from the low, micro level, unreliable at this stage. Could easily get one more low, and I told you that it's then likely that B wave. So yeah, bottom line is I cannot confirm at this stage that there is a substantial low in place. Okay, we need more upside momentum. But if we get a break above the intraday high at 144, that could be a first indication a low has formed either in wave 2, or if we go a bit lower, it might be a reset of wave B. So be careful with this chart. Yeah, it's going to change a lot. We're dealing with corrective structures here. It's a chart that changes its mind quickly. And yeah, just be flexible. And it's not impulsive to the upside. So it's extremely fragile. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.